Today is Monday, June 10th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Mike Niemiec, ADM Investor Services Grain Analyst. Mike, we've got a fairly busy week this week with grain markets. Can you tell the viewers what the trade will be looking at this week?
We got three things. It's all kind of front-loaded. We're looking at the weather first off. The weather kind of toned down its nastiness at what we have been seeing over the past 6 to 8 weeks. We're not out of the woods altogether, but once again, the heavy inundation of rains that we have been seeing, it's kind of toned down, and so that's kind of taken a little bit off the marketplace. The next thing is the fact that tomorrow we're going to get a USDA report, the monthly report. We had one a month ago. It was a non-bullish report, but we've rallied ever since then because of weather and planting considerations. The question is how aggressive does the USDA want to be on this report, because they really don't have a lot of knowledge of what the market had been talking about for the past week as far as planting delays, particularly for the corn. So our surmise is that the USDA is going to be a little bit more conservative with this report, and on paper, at least on this one, it still should be somewhat of a non-bullish market, non-bullish affair for the marketplace. And then thirdly, we're going to get our crop progress and condition numbers coming out after the close today. They're looking for around 80% of the corn, 60% of the beans being planted. There too, we're still running behind, so we're not out of the woods with it as well. We'll also get our first condition numbers for the corn, and the trade's looking for the neighborhood of around 50% good to excellent. It'll be an important number to go forward from, because some peak could be the low of the year, but you're going to have so many different emergences coming up with the corn crop being planted late along with the beans that it could highly vary as far as what the crop does as far as going forward, coming out of emergence in various different stages, that the good or excellent ratings can vary greatly week by week. So those are probably the three things that we're looking at as far as being of importance for this week.
It also looks like we've seen a little bit of progress in the trade situation. How are the grain markets reacting to this?
They're kind of looking at them, it's still kind of a murky. We passed the bullet per se as far as the Mexico-U.S. tariff versus immigration spat. But there's a lot of murkiness in it. The fact that Trump came on out and said that if things don't go accordingly, tariffs are going to come right back on. And then he also came on out and says that the Mexicans are going to be buying a large amount of U.S. ag products, but that was just left on the table as far as no definition of what that was all about. So it's kind of a murky affair, along with the Chinese situation as well. It doesn't seem like anything's going to get done in too short order until the G20 meeting, and even there's a lot of open-ended questions as far as what's the progress going to be there as well. So they are still kind of talking, but it is still kind of murky, and I'd have to say right now it'd probably be a big, big surprise for the market on the plus side if anything was resolved between the U.S. and the Chinese.
There's been a lot of change recently in the Commitment of Traders report. Where are the funds currently, and how do you think that figures into this week's trade and price action?
Well, we found out that the corn market, or the corn traders, did what they wanted to do to a sense of covering their position from the last USDA report. And this last Commitment of Traders report, they were net long the marketplace, even a little bit longer than we surmised. We also still have a small net long at this point in time. So they came out of that position. They came out of their positions in wheat and soybeans as well, but they still have a net short position, which is noticeable in the beans, and a small net short position in the wheat. I'd have to say that with the positions that they have right now, we know what our lows were a month ago with the USDA report. We know what our most recent highs are. We're kind of thinking that the report itself will have the spec trade try and hunker down into our published pivotal price areas. And if correct that on paper the USDA report is a non-bullish affair, that potentially we can take the market to the halfway point, that being from last month's lows to this most recent highs, and kind of go from there. As far as the growing season is still in front of us, we still have a lot of weather to go through, we still have a lot of crop conditions, we still have the politics, but once again at the halfway point, we'll see what happens from that level, with positions pretty much lightened up across the floor as far as the Commitment of Traders report reported.
A lot of uncertainty still with the crop just getting in the ground and a full growing season.
With the weather and the crop conditions.
Alan, let's talk about the financials. What's the outlook for the global economy?
It still appears to be weakening, but it also looks like the U.S. economy is going to remain relatively stronger than elsewhere in the world, especially against what we're seeing in the Eurozone.
U.S. stock index futures are higher for a fifth day after the U.S. and Mexico reached a deal to avoid tariffs. Any change in your outlook for stock index futures now?
I am not now ready to say that we could see some new historical highs in stock index futures before a U.S.-China trade agreement, whenever that is. But with 5 days of higher prices and looking on the charts, we are not that far from record highs. So my outlook is still the same. We are likely to see new record highs in stock index futures at some point, more likely after a U.S.-China trade agreement. But we're getting so close now. Could it be that we'll see new highs before an agreement on the back of lower interest rates globally? Possibly. But in any event, my outlook is new highs at some point. This is not the beginning of any new bear market for stock index futures.
Alan, after substantial gains in the flight to quality vehicles since late April, prices are lower today. What are the flight to quality markets, and what is the outlook for these safe haven markets now?
Well, the flight to quality markets would be the gold, interest rate futures markets, the Swiss franc, and the yen. Now, they have all enjoyed very substantial gains in the last month or more. Some long liquidation coming into those vehicles today with the U.S.-Mexico trade agreement. But I think this is an excellent time to come in with some new longs. Don't forget, we have the ongoing U.S.-China trade situation, as Mike mentioned, seemingly far from a resolution. Possibly at the G20 meeting, there could be some progress made. So with this weakness today, this is a very good opportunity to buy any of those flight to quality vehicles. I think there's a lot left to the upside in all of them.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.